Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Cruising through earnings season, and we aren't quite to the end of it, but we are over the hill. Okay, so we're heading on the downslope now. We had some big names this past week. A lot of like the tech titans have gone. Still some bigger names scheduled this week too. Some volatile names certainly. Even though maybe not on a day-to-day basis as packed, still plenty to look forward to, right? So jumping into it, Monday before the open, Allergan. This is kind of the same story with AbbVie, and they are up. Both are up today. So AbbVie reported today, Allergan's up. So it already kind of moved, and they're in the process of combining the company. So I don't think I'd do anything with that. After the close Monday, Mercado Libre, so MELI, priced in at about 55 to 56. It looks set up for a breakout above 700. You can see had an attempt at it this week, failed, rolled over. But the volatility kind of contracted a bit last quarter, and I feel like the option pricing maybe a little bit more of a wild card. I do think I would mostly view this from like a bull scenario, just because I feel like it's got a lot of momentum. The last couple quarters have been decent, even though the stock may not responded particularly great. The only issue with Melly is that sometimes the options can be pretty thinly traded, widespread, so not always the easiest name to trade from like an option perspective. So just got to be a little bit more cautious with that. Also, another big mover for Monday night is Ring RNG. So software report, they're looking for about 16 and a half. Chart looks great, and it it really has just been like impressive since the huge October pop. That was not earnings related, and actually last quarter, at the beginning of November, you really didn't do much of anything at all. So I guess that's one of my concerns with this is that last quarter it was basically like a non-event, and options at 16 and a half are very, very expensive based off like historical action around earnings. Okay, so for me, probably an avoid, but definitely something that I'd be interested in possibly looking at as like a swing trade after the earnings, especially if the applied volatility drops, right? If it has like another like really small move, maybe like options like 2 3 weeks out, really see that huge implied volatility crush, and you could possibly look for like resumption of the trend, right? For like a swing trade. For the open Tuesday, Hasbro. Holiday quarter for a toy manufacturer. Um, Pricing in 9 points. I think it could be interesting. I mean, it was slammed last quarter, but the quarters before that, even then, we had some pretty big moves. Options pricing in 9, but it seems like the last 3 quarters it's moved more than that. So it seems like it's set up well for volatility strategy. Um, Also, another interesting one, Under Armour. So 2.5 points is what's priced in this quarter. It's coming off of two disappointing quarters in a row. So here, and then the stock in a very tight consolidation right underneath the 200-day. So I feel like it does have room either way, right? I mean, if it can get through the 200-day, plenty of room higher, and then obviously if it's not good and it breaks down, I mean, it's a long ways down just to retest the low from November. So maybe you're not going to see a huge move above 2.5. So I feel like if you were going to look at this, you probably need to get risk on with like spreads or flies or something just to get that overall premium down. Okay, after the close Tuesday, Akamai. 6 points is what's expected on Akamai. It's been on a pretty nice run so far year to date. Finally broke through this 90 kind of congestion area. Um, last couple reports have been pretty solid. Expectations probably a little bit higher though, and it hasn't really been a huge mover on earnings the last couple times around. But I do think that maybe they could still see some more upside on this one, just based off like the way like the chart is set up and like the recent like pretty strong earnings on it. Exact Sciences. So 8.5 points is what's priced in, and they already guided the J.P. Morgan conference. So I guess I wouldn't be expecting a very big move, because really like the last thing to report is margins, or EPS, right? And I get, it's just kind of like a rule for me is that I avoid or typically avoid stocks that already have given guidance. So don't think I'm gonna do anything with this one. Although it was like a good trade at the JP conference if you were able to catch. Um, Also after the close, another big one, Lyft. So 5.25 ish, somewhere in that ballpark. These the stock is moving today, so the options are moving around. Um, so Uber, right, set the bar high with pretty good report. Talked about profitability at the end of this year. So now the expectations are going to be higher for Lyft. So um, it's really trying to turn the corner and get back through 50, and a pent up breakout through 50 really could be significant. But to me, it definitely seems more speculative because earnings or action around earnings on this stock has been pretty lousy since it came public. So, if I did anything, it'd probably be something low debit just to see if they could, really put together a great report, turn the corner, break out, and start to go. Wednesday before the open, big healthcare report, CVS. So 4 points is what's priced in. It's kind of been a mixed bag for the healthcare sector in general this quarter. You've had some good, some bad. Some of the pharma has been good. Some of the managed care not particularly great. Walgreens earlier in January wasn't very good. So I don't really know what to make of CVS. Like the chart seems to indicate 4, maybe 5 points either way, but that's basically right in line with what the options are pricing in. So I guess I just really don't have a strong opinion on it, and I just don't really see like a compelling trade idea. So I might just leave it alone. CyberArk. So software. 12 points is what they're expecting. We've traded this recently, and what's interesting about CyberArk, it's a little bit different than some of the other software names, is that it's been in like basically like a month-long base, right? Tight consolidation, right underneath the tie from last year. Last quarter it popped nicely, but that's also because it got kind of hit pretty hard into last quarter. So, expectations are higher, obviously, and I would be expecting like another pretty strong quarter, but I feel like, um, you know, the strategy would have to be maybe something like longer dated, um, just to kind of smooth out like that higher implied volatility because I don't know if it's going to have that big of a move as it did in November, or even it might not have a huge move in general. But it seems like chart is good, numbers have been good, stock wants to retest the highs, so that's probably how you're looking at it. Shopify, another big software name, 44, 45 in that range, which is to me like a pretty big price to move. I expect the numbers to be solid, but the options just appear priced very high. It's never moved that much in a session ever from a point perspective. So they're basically pricing in a move that would be its largest point move on a given day ever. Um, so to me, it's just really tough laying out the money, or at least justify laying out the money for that. I think I'll just wait and see what they say, and then maybe look at it for a swing after. Teva. All right, so a little bit more interesting of a quarter for Teva because you can see that really impressive January, pricing at about $1.60, and it certainly looks like it's turning the corner. Now they didn't guide the JP conference, so this is going to be the first look at numbers, and the options are on the high end compared to what it typically moves. So, this is definitely a quarter where Teva has a lot higher expectations versus, long stretch expectations were very low. Now, it seems like expectations have moved to the opposite end, a little bit higher. So, they're really going to have to deliver. But if they do, I mean, you can see where the stock is coming from. And if they can really turn the corner, it might be something we want to be involved like on a longer time frame. All right, after the close Wednesday, AMAT. So 340 ish, kind of in that ballpark is what they're looking for. Several of its peers have already reported, so expectations are really kind of one sided on this. I mean, I'd be expecting good news from AMAT because basically all of its peers reported pretty good news, um, which, kind of makes it a more challenging setup in that sense because it's right at its 52-week high. Expectations are basically one-sided. So to me, like most of the risk in this scenario would be to the downside, um, you know, which to me again isn't like a particularly great setup. Lamb maybe is a sympathy trade because AMAT moved off the Lamb report. Now maybe Lamb moves off the AMAT report, but again, like when at this point in the quarter, like I don't know how much uncertainty is left in this AMAT. Cisco, 240-ish, 240, 250 in that ballpark. Last quarter, pretty lackluster. Actually, last couple of quarters, kind of lackluster. But the stock has rebounded. Technically, it's not all that interesting to me, but option pricing, it is because it's averaged about 4 points the last two quarters. It's only priced in about 240-ish, right? So maybe like a lower debit strangle just to see if it kind of moves in line with those past two quarters. Um, NetApp, so another tech name, 450-ish is what they're expecting. I think it's kind of an interesting setup because it was crushed in August. Really didn't do a whole lot in November, but it come all the way back, right? And I feel like compared to last quarter, options are high. Compared to August, options are low. So technically, it does seem like maybe like 6 to 8 either way. So like something in between that big August move and small November move. But to me, it kind of screens as one of the more interesting names, or from like a trade perspective next week. Trip, so another tech name. So 3.5 points is what's priced in, and this is going to be the first of the travel booking stocks. And it's really going to be interesting to see what they say regarding business, right? Because of the coronavirus. I mean, last quarter wasn't good, and then now you have like a lot of like issues, or people maybe a little bit nervous about booking like travel, right? And stock technically hanging below 30. Chart seems very, very, very bearish to me. Same kind of as Expedia, which is going to report the next day actually. And what's interesting is you have this, Expedia, and Trivago all in the same week, but Booking doesn't report next week. So honestly, I feel like the way to maybe approach those is like actually with Booking like a sympathy trade. Thursday before the open. All right, Baba. Um, 11.25 is what's priced in. I mean, it's just a really tough backdrop for Baba to report earnings. I mean, the quarter you're probably expecting it to be pretty solid, but like, I can't imagine that they're going to have any visibility going forward, right? Like the development in China is so fluid right now that I just it just seems like it's just not going to be like that big of a mover because people don't really know what to expect, right? And maybe because this is Thursday of next week, maybe if the coronavirus headlines calm down by that point, maybe there could be a trade. But I know otherwise, I'm probably just going to avoid this. Kraft Heinz. So I had kind of like a head fake today off of like a fake M&A headline, but that might get people looking at it. Option pricing to me really doesn't seem too bad at 2.5. And the chart relatively range bound. You've had some bigger moves in a couple staples, right? Like Mondley's had a real big move recently. So I feel like this chart sets up pretty well for a volatility strategy, like a strangle or a straddle. Another interesting one, Yeti. So 4 points is what they're expecting on this. Chart looks pretty bullish, and you can see the stock is hanging out just around the top of like this long-term resistance range, right? And it hasn't responded particularly great to earnings recently. Like there hasn't been that many big moves, but maybe from just like a strictly speculative point of view, like a bullish point of view, because if they crush it and the stock starts to break out, there could be a pretty big pent up move up through like the top of like this yearly resistance. Okay, after the close Thursday, AYX. So 16.5 points was priced in. Those are monthly options though, so you got an extra week on top. Software stocks had an absolutely fantastic start to this year. I mean, it's up about 40%, and that maybe might just be too much because at this point, you're wondering like how much upside is into earnings because expectations are probably already super super high. It's hanging out underneath the high from last year, and the chart looks great. But I just, after the run it's had year to date, I'd probably just be a spectator, see what they say, maybe give an opportunity for like a fast swing setup right after. Arista. So 23.5 points is what's priced in this quarter, and that's nowhere near what it moved last quarter, which was about 70. So it's come back not all the way, but a large majority of the way. And you know, I mean, it's just it's hard. It almost like you stare at the options and you're like, these are so underpriced, but it's also a little bit tougher setup than it probably looks at or looks like at first glance to me because um, we've seen some names like Invisalign recently or some other names that have gotten absolutely demolished one quarter and the next quarter kind of like bounced back a little bit. So I feel like it's possible to maybe see like 20 to 30 points just based off the chart. But obviously, with the options priced in about 23 and a half, I feel like you'd have to get the risk down somehow. Datadog, another software name. So 6 points is what's priced in. Those are monthly options, though. Had a really strong quarter back in November. That was his first one since coming public, and the stock has acted great since. But the valuation does seem a little bit stretched here. And the thing I'd say is like as long as the numbers are decent, I feel like the stock could kind of continue to work higher. But in terms of like an actual move off the earnings, maybe thinking like something like a calendar spread or longer term options to kind of like smooth out like that high near term implied volatility. Because I'm not sure you're going to get like a really big jump. Expedia, so 825 is what's priced in. I mean, like I was talking about before, I mean, like this was an absolute train wreck last quarter, and I can't imagine it's going to be much better this time around. Right? There is an activist that's kind of agitating in it, so that's probably why it's not down more. But I still think Booking might be the way to approach it because you have this, Trivago, TripAdvisor all in the same week, and Booking doesn't report next week. Nvidia, big chip name, 17 points is what's priced in. Chart very similar to AMD going into earnings, and I'd expect it to be pretty good, but I just don't know what type of upside to expect, right? Because a lot of the semis have been getting sold on good quarters, and um, Nvidia options really not cheap by any means, and I might either avoid this or maybe wait for a dip till after, or even maybe like an AMD could be like a decent sympathy play on this. Roku, another. So this one's kind of a wild card. It might be the biggest wild card of the week. 1975 is what's priced in. So the stock has really just been like lifeless for about 2 months, and last quarter got hit after some lower guidance. The option pricing is high, but the setup also could be pretty explosive either way. I mean, you know, after like this kind of like quiet 2 months, I mean, it seems like a pretty big pent up move is possible, and you can see that. I mean, there's still a pretty obvious gap up to 160. But what's interesting too is that it's also leaning on basically like the year to date uptrend, right? Or it's actually kind of just hanging out underneath it. So really kind of like a critical report from that perspective. And I feel like maybe like a low debit strangle could be a really nice way to approach this, just to see if you get like a really big pent up move after kind of like a quiet stretch. Okay, and then last but not least, Friday before the open, AstraZeneca. So not a name I trade too often. They're pricing in 2 points this quarter. Pharma though, pretty good reports, at least this week. I mean, Bristol Myers was good, AbbVie was good, Sanofi was good. AstraZeneca, good quarter back in October, has acted great since. So, I mean, it seems like kind of like lean bullish. Maybe you see if you can see like a quick move higher just to retest the high from earlier in January. So it's maybe something like low debit, bullish, just for like maybe like a quick pop, kind of follow like the pattern of like Bristol Myers, AbbVie, and some of these other ones. All right. So that's it. So again, still plenty going on, and some actually some pretty big priced in moves for a few days next week. So definitely a possibility for some fireworks. All right. So if you like these videos and you're looking for more information on options education or more option trade ideas, please follow up with the link in the description of the video for more information on options to play. Hope you all have a fantastic weekend, and I will talk to you on Monday.